Good evening. This is Ken of Tortoise Capital with the review of the weekend trading report for August 10th, 2019. I'd just like to draw your attention to a new method of distributing the daily and weekend reports. It's going to be on the Patreon page. You see the link there. And that's going to allow us to standardize our subscription service and simplify the administration of customer reports and accounts. So thank you for all your support. Let's get on to the business. All right, so we've got a market that's in bullish, volatile conditions. Looking at the NDX consolidated here, we're overbought on an annual, and then that 3-day look back, we're in the middle here on the intermediate intervals. In the market mosaic, price with respect to the 200 is white bullish at 4.5%, slope of the 50s, yellow bearish. Risk index is the 30-period moving average of the VIX divided by the 10. It's at 0.813 right now, so we're deeply into risk off because the boundary between risk on and off is 1.0. We take that score and look at the last 5,000 trading days and compute the risk Z. That's at minus 2.16. You can see here a 90-day histogram of that reading, deeply into the risk off. The last time it was this deep and reversed, this turned out to be a great swing trade opportunity right through here. In fact, one of the best 30-day periods we've ever seen. So, an extreme volatility event like this, that when that begins to shrink, there's some tremendous opportunities on the other side historically. So we're going to be monitoring that. Our strategy is going to be shortening our time frames, taking advantage of the larger intraday volatility. We saw that all this week. And then building swing trade positions in the direction that the market votes after the volatility begins to decay. In the blended monthly rebalancing, you can see the holdings for August. Next reevaluation on or about 1 September. These are the leaders in the clubhouse as of close of business Friday. ETF2 theoretical exposure is at 20%. 2 of the 10 indexes are above their 4-month moving average. The other 8 are below. And again, the Patreon link. Quick look at some of the ETF BMR portfolios. It goes on cash when it's below its 4-month moving average, so you can see most in both cases are on cash signals. The key winners right now look like real estate and technology. Latin America even had a nice little bump. But again, the losers continued to lose with the exception of Latin America. ETF 32 expands that list a little bit further. That's about 50-50 buy-in versus cash. All of the globals are on the weak end of the curve here. Defensive plays like utilities, real estate, treasuries, and gold. In Brazil, also along with Latin America, had that nice bump. So I'll be looking for them to continue to have some good follow-throughs. Dow 30. The winners generally won this week. Really nice moves. Visa, McDonald's, American Express, and United Tech, leaders at the turn. But once again, the long-term losers had more difficult weeks and months. So from extreme conditions come extreme results, and that's why I like to see that segregation here based on the blended performances. But I'll be looking for follow-through momentum among the new and emerging leaders. Same story with the sector spiders. Again, those that were losing continued to lose. More of the defensive plays at the top. Staples, technology, utilities, real estate. ETF Max. These are the among the 300 or so ETFs we look at, these are the ones that had the best performances. So we're really looking at the top end, everything gold, silver. So I like looking at wheat and precious metals as a proxy for all of those, like a blended precious metals with leverage kind of a company. Symbol WPM. ETF2 regional report. Large caps and tech are the only ones on a buy signal. Everything else below their 4-month moving average. The S&P at 46 is better than the globals at 37. Strength in technology and staples among the sector spiders. The alternate classes doing well. Pretty much everything else suffering, with the exception of Brazil and Latin America. So that's of interest to me. ETF top 30. So slightly different way to look at the relative strength. Silver has moved into the top at green and white. It was good, now great. So that's an opportunity to exploit new strength, new leader. Things like Switzerland and technology select and dividend appreciation, white then green. That was great, now just good. So we want to be looking to preserve profits, but then watch for a resumption. Shifting to the daily report for Monday. So the big harsh sell-off with increasing volatility dropped us from the fall into the winter. We've had a couple days of support and recovery, and then it gave back a little bit on Friday, but still held up pretty well. But the dragon is sloping down. The river has rolled over. Volatility expanded, has now started to stabilize and will start to decrease. You notice the Bollinger Bands are starting to converge. This is the 1-day range. The orange is the 10-day range, and then the yellow is the 30-day range. You can see we visited the support level down here and had a nice bump. Finished above Monday's opening, so in general that would be seen as a strong week. And now that's a 50% retracement back to the upper high. So in the winter, if we see any kind of stabilization here this winter, will become spring, and then then that would be a sign of a potential gain. So the last time it did that, you notice here, from this price level and this price level, made that nice move from 278 all the way to 302. So 10% plus move. So we're going to be mindful of that. Now, it doesn't have quite as far to go, but the upside of 302 is still in play. It's got to get through the dragon, and really 296 is the tactical mark there, the top skin of the dragon. If it has to penetrate that to get to 302, obviously. So this makes the open in the first couple days very interesting. 2 more days of not failing further will turn this into the spring, and then it will be seen as a low and a higher low in the dragon. So cautiously optimistic here. Be using the MACD histogram to help guide when it's time to shift from short-term intraday and turbo trading back into the position and swing trading. But right now we're still very tactical day to day. Market volatile, no channeling of reactions. You see the max pains, the usual suspects. I like IBM, CAT, and Intel here. Lots to choose from on the auto framer. Real strength down in here in McDonald's and Merck. Notice they had breakouts on the NDXs, and then a collapse here. IBM, which is max pain and 3.8 on the auto framer. A handful of dojis. I'm looking at these leaders down here as recovery leaders. I'll be framing all those. ETF 30. No breakouts on the NDX. Plenty of things testing out well on the auto framer. But the absence of the normal swing trade simply means that this is a market condition that's sort of in a meltdown. It has not stabilized yet to allow some of these our standard swing patterns to fire. But the trade location really suggests there's a lot of possibilities in here. I'll be looking at XME as a follow through. Big loser on Friday. And then the big winners down in here: silver, gold, real estate. Only one super pinch: utilities. I like that Microsoft has a compressed pinch box. That lack of volatility means that it was pretty immune to the sell-off of the last couple of weeks. So I'll be looking at Microsoft to be a leader. A ton of goodies to choose from here in the auto framer. Looking at things like Pfizer and Win. These are really good frog champions, especially Win. 3M, Caterpillar, Intel, and IBM. I really like those as rebound plays. Regression line fractal framework. Top shelf in the green, symbols most above the most ATRs below their own RL270. So if the RL270 is a fair value, then these are deep discounted value plays, buying quality on sale when it recovers. So there's our Intel, 3M, Boeing. In the red, the most numbers of ATRs above their long-term fair value. So these are the relative strength leaders, if you will. Coke, Home Depot, Apple, McDonald's. I'm definitely going to be framing McDonald's. That has some real possibilities for gains. Just one daily squeeze in PM. Four Seasons and MACD. I've adjusted this chart a little bit here so we can see now the ETF 30 and the Dow 30. Again, I like finding targets in the late winter, early spring, so lots to choose from here. Because I can now start playing that rebound back to the zero line, and then we have a long spring and summer to benefit from. So I'm gonna be looking at Mexico. The NDX summary. So I've got this sorted by the 10-day. I just noticed this in myself. I tend to be. I like to sort by the NDX 10 in a descending fashion because I like rebounds from the oversold positions on swing time frames, which sort of makes me a hunter scavenger like a jackal or a coyote. That's the habit of mind that I have to get well started after sell-off periods, to start building positions based on shorter term hit and runs, and then let that slowly grow as the new leaders begin to emerge. So metals and mining is certainly on my mind. IBM's breakdown over each of these look-back periods has certainly got my attention. Merck and McDonald's, though, big winners, especially McDonald's. My goodness. And real estate, utilities, gold, silver, treasuries had all the positive defensive sector plays. Even healthcare has shown some recovery. So those are all things I'm going to be checking out. Market mosaic. First leg back, 50% retracement back at halfway back to the previous high. The slope of the 30 has gotten one SD below long-term average. If this continues to stabilize another 3 to 4 days, this will start to roll up, and then feel a little more sanguine about this recovery. But this is about where it should find support if this general uptrend is going to continue. We'll see how that goes. sharp spike in volatility. Even in a longer term measure, it's come out of the quietude. But the slope of the 30 has come back much closer to normal, the long term normal, and is now ready to make a recovery. The 90 has cooled off now in the middle of the Yellow River. The 30 has come down to the belly of the Yellow River. And then the 10 has made the turn. We're back at the lower boundary of the river. And the far side would get us back to around 302. So cautiously optimistic. If this collapses, though, first price support here, and then it's Katie bar the door. So 270 is sort of would be the negation of the last 90 days of gains. And just for the record, you can pause that if you like. So lots of work to do, framing some shorter term trades for Monday. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.